What's up everyone? Today we'll be adding Near protocol to the list of traded coins on this channel. So in this video we'll first cover a simple and beginner friendly oscillator strategy to give us some extra confluence in finding market reversals for our more advanced analysis. We'll then cover a higher time frame analysis and a lower time frame analysis and get into some trade setups. So in this simple strategy, we use 3 different oscillators. One is a momentum-based oscillator, the second is a volume-based oscillator, and the third oscillator combines both momentum and volume. The idea is that you want strong reactions and deviations on all 3 oscillators, and you want them to line up. This method is also very powerful in identifying divergence for larger moves. For example, we have a market bottom on the RSI right here, on our volume oscillator right here, and our both volume and momentum based oscillator. You can see that price almost bottomed here, but we had another bottom right here. We have price action moving downwards, but on our oscillator we're actually setting higher lows here. You can see that all of our oscillators are moving up while price action is moving down. What this led to is this much larger move up here. You can also see that when RSI peaked here, volume peaked here, and both volume and momentum peaked here, we had a market reversal right here and a move down. Although this isn't the best strategy on its own, this gives us extra confluence for setting up trades on a more advanced analysis. So at the moment you can see that RSI, volume, and momentum are kind of in the middle of nowhere, so it's not very much use to us at the moment, but you can see that right before, around here, that we had peaks in the RSI, volume, and momentum, and RSI. And we're seeing some sort of divergence here as our price action is going up, but our indicators are moving downwards. That is indicating sort of a move down here, but we'll get to this in my higher time frame analysis, but I do believe that we are primed for one more push up. So let's get to our higher time frame analysis now. So for a higher time frame analysis, this is just where my head is at. I believe price action is actually looking quite healthy for Near protocol. We are printing clear higher lows on a higher time frame, which is very, very good. This is also why I was inclined to put this on our list of traded coins. So if you go down to the 4-hour here, even these bull flags on the 4-hour were quite healthy. And they gave us pretty decent reactions and moves up. I want to go back to the daily here and look at the moving averages. So we're just going to look at 2 simple moving averages, the 50 and the 200. And I just want to cover the possibility of a golden cross. And when you're taking swing trades, a lot of times you want the 50 to start flattening out, and that will be your entry. And you can see that price action actually found support right on the 50 right here before making this move up. What you can expect now that the 50 moving average is curving up is that you can see the 200, which is this red, curve down. It will form a golden cross here. But what you want to see with the price action is actually a retrace here. If we actually just move up, this can just signify a bear market rally, and we can see, a move back down here. So what you want to see is a clear higher low being printed on a higher time frame. And ideally right here, you want to see support on the 50 moving average and some sort of deviation, which would be your entry, possibly into a order block, and then you want to see that move up. So if this is the case, we'll look for some trade entries into a short somewhere around here, and then a long trade somewhere around here. We'll go over some key levels that Near protocol has to keep or break in order to be bullish or bearish. So I do believe we are due for a retrace here, and price action is looking fairly exhausted at the moment. We're seeing some sort of distribution here, and I believe we can see a little bit more ranging and some sort of manipulation before a move down. If you're already short in the market, I would be careful as we're in danger of a liquidity sweep on these relatively equal highs. And this would give us confluence as a liquidity sweep here would also tap into this order block up here, which is a daily order block. I would ruminate on better short entries within this order block to look for a swing failure in a more confluential area, which we'll cover shortly. So my idea here is that we'll do a little bit more ranging within this range right here within the value areas, and we'll see some sort of manipulation maybe a raid candle up, and then our move down. So the key areas to be looking out for are the value area high, this POC, these moving averages, and also the range high here. So if you zoom out here once again, you can see that the macro range high is what's given us support here. We found a bull flag right above the range high and we shot up. We came back down and found support on the range high again. So what would give us bearishness is that if we see price action actually come down here and look fairly weak, and we see a move up here and a move down, this would be our short trigger. And when I say when price action looks weak, a lot of things that I'll look for are just smaller candles or candles with high tails right here. That'll be a sign of weak price action. Or price action that is setting, weak highs like this. But if price action is looking pretty healthy, clear higher lows, there's a chance that it's just a deviation and we just move up. But if price action looks, something along the lines of like something like this, then you can see possibly a drop down or even a formation of a bear flag, just like this. In order to be bullish, we want to claim this value area high. So you want to see price come up here and form almost a bull flag here, and then we want to get a deviation and a move up. This will sweep out the liquidity on these relatively equal highs and tap into this order block here. And ideally what you want to see here is a swing failure and move down, where you get your sweep and your change of character. You get a retap into supply here and our confirmed bearish order flow into a move down. So if I zoom out a little bit here, I'll go back to the daily just to show you guys this order block. This order block is fairly large, but what I would look for are rejections off of the 200, rejections off of the fib, rejections off of the October VWAP. So if I turn on the VWAPs here, you can see that the previous VWAP from October is right here. That would be also a point of rejection, and also tap into this H4 broken base. So a lot of these areas are primed for reversal. So if I were to take this trade, I would probably set DCA limits on a lot of these confluential areas. For example, I'd set my first limit on this fib, second limit on the 200 EMA, third limit on the October VWAP, and a fourth limit on the broken base, and set my stop right above this order block, as price action above this order block would invalidate my trade. Something you can do is also just wait for a confirmation of reversal. So if you get price action that looks like this would be your entry, where you get your sweep, and often the sweep is a raid candle with a very high wick. It's sweeping out all the liquidity from anyone who went short a little too early. Then you want your change of character, which is your break of market structure. And what this does is it generates a zone of supply. And in this zone of supply, you'll get a retap, which is your smart money entry, where smart money enters their positions, and we see a confirmation of reversal. So this would be the general area that I would look for short trades. As price action develops, I'll try to get another video out to you guys, showing you guys, possibly a more confluential area for near. But it is a little difficult to do that real time on YouTube, so definitely check out my Patreon if you guys are interested in trade calls like this on a more real time and on the daily. And in terms of a long position, I want to see price action develop a little bit more. I want to see the 50 average move up and find some sort of support here. We do have a weekly order block right here. So this is a weekly bullish order block. I'll mark it green because it's bullish. We can see price come down onto this 50, find support, and find deviation into this order block before finding a actual push up. We do really want to see a very healthy higher low here to confirm bullishness in the market and bullish order flow on a higher time frame. But in terms of long entry, this is definitely the zone I'd be looking at down here in this weekly order block. But as price develops, and if price looks fairly strong, there's a fair chance that we don't even enter this order block again, and then we'd find support, an entry on maybe possibly this order block right here, or other zones of demand. But like I said, as price action develops, I will keep you guys updated, so definitely stay tuned for that. If you guys enjoy this type of analysis, please make sure to leave me a like and subscribe, as it helps out my channel a lot, I really appreciate your guys' support, and I'll see you guys next time. Thank you.